If you want to purchase something, sign on for a service, or invest in something for your business, and you want to know if you can afford it, what do you do? No, seriously, what do you do? Most people pull up their bank account and see how many dollars is in there. That's why having one bank account is really limiting your success. Having one bank account is the reason why you are not getting consistently paid. It's the reason why you are not adequately saving for taxes. Having one bank account is causing you more stress. And that's why I recommend, at a minimum, you have 5. Yep, you heard me, 5 bank accounts. Our clients who see the most success have 5, at a minimum, bank accounts. But real quick, if you're new here, my name is Cheryl. My business partner, Katrina, and I own Empowered to Profit, where we help small business owners put more of their revenue into their personal accounts so you can live out those dreams. Yep, you heard me right. 5 bank accounts. And let me quickly break them down. Why? 1, if you want to know if you can afford something, you want to be able to pull up your bank account. The Profit First strategy calls this bank balance accounting. And the reality is the majority of business owners do this. So rather than changing our tried and true habits of, if we can afford it, let's just check how much money is in our bank account, rather than trying to change that habit, why don't we work with the habits we have and ensure that they're working for us, not against us? And that's why having 5 bank accounts is critical to ensuring you get paid, you're saving for taxes, and tax time is not a big stress to you. Your business is not operating on negative amounts. You can afford those things you desire. You can always afford the payroll. Your cost of goods account is never underfunded. Having multiple accounts makes it easy. So let's just jump into the 5, because at a minimum, I suggest you have 5 bank accounts that will change your business and your pocketbook. 1, have a revenue account. So this account is utilized to collect all the funds. Whenever someone pays you, we immediately start pouring funds into this revenue account. And then periodically, we have some clients who do this weekly, we have some clients who do it twice a week, and we have others who do it twice a month. Periodically, you're going to take whatever amount is in that revenue account and you're going to segregate it into your paycheck, different bank account, a tax savings account, different bank account, a profit account, more on that in a minute, as well as your operating expense. So if you're following along here, 5 bank accounts: revenue, owner's pay, tax savings, profit, and operating expense. Spoiler alert, some businesses require more bank accounts, but for simplicity's sake, let's just talk about these 5. So we talked about how that revenue is divided out, and we do that on the same interval every week or every month. The same exact time, we divide it out based on a percentage. And then why? Because we're not in business to pay everyone else and not ourselves. And if we do not have enough, there's a saying, and I learned it from the Profit First strategy: what comes first gets done, what comes last gets ignored. So you always pay yourself first. Out of sight, out of mind. So you're going to pay yourself, whatever that percentage of revenue is. The goal, if you're making under $250,000 annually, is to pay yourself 50% as owner's pay. More on that in a different video. Okay, so first you're going to pay yourself. Next, you're going to set aside money for Uncle Sam, because at least if you live in the United States, the one thing that's guaranteed is Uncle Sam is going to want a portion of that revenue. And to ensure we are not stressed at tax time, we are just going to set it aside and forget it. So a portion of our revenue every single month goes to Uncle Sam and we set it aside. Second bank account. Okay, moving on to the third bank account. The third bank account is known as the profit account. What this is used for is, 1, as a bonus to the owner, because let's be real, you're operating a business here. Take a dang bonus. If you were investing in Wall Street, you would get a bonus. So your business should pay you a bonus. But what this account also does is, if there was ever an expensive emergency that you needed some emergency funds, rather than utilizing credit, you can use the funds in your profit account for an emergency. We can certainly deep dive more into this profit first strategy. If you want more information on that, comment down below and I will love to give you all the ins and outs of that profit first strategy. If you're new to that concept, it's a book written by Mike Michalowicz. It will change your complete business structure. I used to be a profit first professional. We can talk all about it. If you want to know more, comment down below, profit strategy, and we will jump into that strategy. Okay, so that is the fourth account, right? So we did revenue, owner's pay, taxes, profit, and the last account is your operating expense account. And this is, once again, a percentage of your revenue gets dumped into your operating expense account. And we use this to ensure that you have funds to run your business. But the reason why it doesn't come before you paying yourself or setting aside funds for Uncle Sam is because if we don't do that, there's not going to be enough money left over for you. And if we can be real, we can operate our businesses and whatever amount we see in that account, we can utilize that bank balance accounting and get it done. Okay, there's definitely more in-depth ways with profit strategy, and we have a huge template on it that I swear will change the entire game. But if you're new to this, the first thing I want you to do in business is operate off of 5 bank accounts. And no, I don't want you to pay for your bank accounts. They should be free. I think all of my clients have a free bank account or basically free. There's no need to pay for a bank fee. And yes, they'll give you 5 bank accounts. So get that revenue account, change all of your deposits to go into there because all your money comes into one account. And then the same interval each month, we segment it out. And it goes, we pay ourselves a set percentage. If you can hit the profit first targets, 50% of that will go into your owner's pay. And I just want to rewind a little bit. It's 50% of whatever is currently in that revenue account. So how do you know? You pull up your bank account, you look at your revenue account balance on whatever day you do it. Say you do it every Monday. Say there's $4,000 in there and you pay yourself 50%. 2,000 of that will move straight into your owner's pay account. Then you move a percentage of it into your tax account because we do not want to have tax time be stressful. Set aside the funds we know we're going to have to pay. We set aside a small percentage for profit or an emergency savings account. And then lastly, the remainder goes into your operating expense account. These 5 bank accounts will change the way you do business. They will change how much money you take home. They will ensure your tax time you are saved. If you want more information on this profit strategy, profit first strategy, comment profit first down below, and we will for sure do a whole series on this. But it's a complete game changer. I have had clients go from taking home $0 in the history of their business to taking home over $80,000 in just a profit payout. It's a game changer, complete game changer. So with that, thank you for hanging out with us tonight. I would love to continue the conversation in the comments, and cheers to profit.